Yeah, good afternoon, everyone. Yeah, I'll wait for a few more people to join us and then we can start. Salvo is saying hi, so hi. Yeah, I hope everyone has been having a good trading week so far. We're on Wednesday. Yesterday, I'm sure it was very full of activity because we had a lot of movement towards the end of the session, towards the end of the trading day. We might take a look at that today while we cover today's session. So if you can hear me, you can say so in the chat. I think I'm audible. Okay, so I think we can just kick it and start from now. So yesterday, if you went through the session we had, we talked about getting the bigger picture. We talked about getting the market context. We talked about understanding the theme of the market, the mood of the market, and that was good. But then now we need to get into the specifics. We need to know various entry techniques. We need to know various ways we can tackle the market. Because once you know the theme, you know where to look for entries, then the last thing you need to know is how to enter. And covering how to enter, you might have a few basic themes with regards on how to enter the market. The first one and the most common one is, are you trying to enter the market using momentum? Now, what is momentum? Momentum is when we have a sharp movement in price that you expect it's going to be sustained. So for example, if we looked at this chart over here on this section over here, you can see that the market dropped sharply. So we know that at this point in time, there was high momentum in the market. Now, the thing about momentum is there are various ways to get into the market using momentum. You need to know what's a potential trigger for momentum. So there are very many ways to get into trading momentum entries. The first one is, what exactly is the trigger of momentum you're trying to look for? So in this case, we have number one, for example, you have time of day. Time of day can be a very good momentum trigger. And by time of day, mainly traders focus on what time of the sessions what time do major market sessions open. So for example, in this case, if I was to bring my cursor here, I'll see that this is around between 9:30. I don't know if this is visible, but this candle was at 9:45, and this move lasted all the way till about 1. So I know that the first 2 hours, especially for pairs that are in the Eurozone, because the market opens from around 9:30, 10, 11, that's when there's a lot of activity, then there is potentially a momentum trigger. So that's a good enough reason for you to now start looking for momentum setups. You wouldn't want to try and trade a momentum setup and you don't see, or you find that the market isn't moving, then it's going to be a waste of time and it's going to actually hinder you from making your trades. For example, in this case, I can see that, let me remove this. I can see that the market was consolidating over here. So if I was to outline this section here, and this is Euro USD. So I know that for Euro and Pound pairs, there's usually a time trigger, a time of day trigger when people get into the market. So in this case, I can use a breakout strategy. Most of the times people advocate for such strategies without taking into account the context of the market. So in this case, if I know that at a specific time of the day, there is going to potentially be a lot of movement, then I can use a momentum entry type of strategy. And in this case, number one, you can use a breakout strategy. So a breakout strategy or a range breakout strategy is where we have the market consolidating between 2 points. And we know that at a certain time or at a specific time, the market is bound to move out of this range. And that's when we have, or that's when we'll be looking for momentum entries. And the most common type of entry, usually the first one is a breakout. So in this case, we had the market swinging higher, lower, throughout the Asian session. And if you don't have adequate knowledge in trading sessions, then I recommend you go do a bit more research on that. So in this case, we have the market swinging throughout the Asian session. So a breakout trade will be most appropriate when you expect a big chunk of traders coming into the market. So this happened at around 9:30, where we saw a big bearish candle following through. So in this case, because this is high momentum, the traders would want to wait for maybe a confirmation pattern. Then again, the breakout is already confirmation that there was going to be high momentum at this session. If we move on to today's session, we can see that we have something similar. We have the market consolidating. So we have this range over here where the market was characterized by small, I think we can even extend it all the way since yesterday. So we have this range over here where the market was sort of in a sideways movement. And then from around, it's around the same time, around 9:30. So the other one was 9:30, this one was 9:30. Why 9:30? Between 9:30 and 11, that's when the London traders are coming into the market. It's probably a good time to look for momentum in the market. Then you can play momentum setups. You wouldn't want to place a breakout trade anywhere within this session because the market is very slow. I'm sure some of you have already tried, probably you've placed a trade and then it takes time. You're wondering why isn't my trade moving, or have I done something wrong? Then if you're trying to attempt to trade momentum and there's no momentum, then your whole hypothesis is wrong. You probably would want to review why you are anticipating momentum in the first place. And it has to be a solid enough reason. And one of the solid reasons is the time of the day. So in this case, at around 9:30, we saw a breakout off of this range. And in this case, not only did we see a breakout, so this was a breakout, we also saw an inside bar. So an inside bar, for those who want to trade inside bars, you simply place a pending order on the previous mother bar. So you have the mother bar, which is this one, and the inside bar. Again, if you're just joining us, today we are covering trade entry ideas. Yesterday we covered market context ideas. Today we are covering trade entry ideas. So the market context give you your general bias. They tell you you need to buy in this market, you need to be a seller in this market. But then exactly when to enter is what we are covering today. And the first style we've talked about is entering when there is momentum. And when there's momentum, you need to understand what is causing the momentum. Is it time of day, which you've done? Is it maybe news? I think we'll look at news and fundamentals. Or is it a sentiment shift that you expect in the market? So in this case, this is still time of day, because if you look at this candle, it's at 9:30, which is the London Open. The London Open, does it have to have momentum every day? Not necessarily. But is it a good trigger to look for? Probably yes, because most of the times, majority of the traders come into the market for the first time during the day, during the London session. Then we have the other major session, which is a New York session. So in this case, from around 9:30 all the way to 11, for the first 2-3 hours, should expect is that there is some momentum. So in this case, if you were to put a pending order over here, where I've plotted the black line, once you see the inside bar, then it will probably give you a good reason to take the market higher. So that's that. We can look at other times So if I was to scroll way back into this chart, so let me scroll back now to the, so we've covered 3rd of January. Let's see, 30th of December, was there some momentum at 9:30, from around 9:30? So in this case, the market was fairly quiet, but the time of day entries came around from the second major session, which was the New York session. So in this case, although it was December 30th, let's see. Let me mark this out. We have the first half of the session, which was fairly quiet, like that. Then we had a break at around 12:30. So again, it doesn't have to happen all the days, but in most days, if there is activity in the market, or if you anticipate activity in the market, then, and it's probably a Euro USD pair or a Pound USD pair, you'd have to wait for when buyers are coming into the market for you to have a good enough reason to play a momentum setup. If you're not looking to enter a breakout using a momentum trigger, then you're good enough not entering the trade at all. For example, and this is a good example, if I was to zoom in this chart, I think we have a good example here. Yeah, here. We had a breakout at around this point. I think I'll highlight this with a different color. Just a minute. Yeah, we had this candle over here. This one. So we had a range, but then we had a breakout. And what time was this breakout? This breakout was at around 7:45, way before the London session had started. In that case, because you expect that there is low momentum during the Asian session, did this move follow through? The answer is no. This move did not follow through because there was not enough momentum. Probably there are other factors you need to consider when doing this. For example, what we did yesterday with the market context. That was number one. Number two, 7:45 with a Euro USD pair. Chances are traders are not yet coming into the market, so there is low momentum in the market. So it's probably not a good time to place a trade. You'd have to wait till late in the day to place the trade. Then we had a small consolidation over here. So I'll have to mark this again. We had this small consolidation. I think I'll change the color of this. That we had a small consolidation, and then what happened? From around 9:30, we had a push outside consolidation. So in this case, you'd probably build a narrative from this. If I was to zoom out, I can tell that you were generally, use a H4 candle. So I can tell that in the H4 time frame, you're generally in a sort of a bullish trend, because if you zoom out, you are coming off a very major bullish trend. So your bias will still have been bullish, probably in a bigger context. But since you are viewing this from a much smaller time frame, then it's good to, just a minute, move this. Yeah, so it's good to consider other factors when it comes to when exactly you want to enter. Yeah, example, time of day. So now in this case, I wouldn't have followed through with this trade because number one, it was at 7:45. This first entry over here. So I'll have to change this color. Something else. Green. So the candles under the green section, this breakout over here, this breakout happened at 7:45. It will have made sense, or it probably would have been a good trade if you're attempting to trade this when the market is opening, because you expect traders to follow through with it. But since it was very early, then chances are that move wouldn't have followed through. Then what happens? We get into a consolidation at this point, and then at 9:30, 9:45, when the market is opening for the London session, I think from around here, that's when we get our breakout trade. And this breakout has no retest. So it was a complete a breakout trade. And that's when you apply the concept of breakout. So most of the times you'll have people or traders attempting to trade, for example, breakout trades in isolation, not knowing, number one, the context of the market or what we did yesterday. Number two, momentum triggers, because you need to know how powerful that momentum is going to be. If you're going to attempt to take the trade, for example, at the first candle or even at the second candle, yeah, that means you have to be very sure that it's going to be a good trigger that's going to sustain this move. So that's the first one. The second one, we can use, so we've talked about 9:30 and the London session. Just a minute. Yeah, but we can also talk about the New York session. And the good thing with these pairs is each pair has its own specific zone where it's the most traded. So for example, if I was to look at US 500 over here, I know that US 500 is S&P 500, which is majorly traded during the New York session. So that's when I'll be looking for momentum if I'm doing a momentum entry. Again, this case, if you had waited until around 4:30, that's when the New York session is. We had this play over here. So if you were with us yesterday, you'd know that we did a bit of a context analysis on this pair and concluded that we were generally in a downtrend. This was yesterday. So we said we're in a downtrend, based off price action, based off turning points, and these turning points are still where I had left them from yesterday. So in this case, you'll be waiting for, now we use M15, we will be waiting for some sort of trigger to tell you that that's when you need to enter. Because number one, you know it's a downtrend, but when do you enter exactly? That's when it becomes tricky. So if you're planning on using momentum, you probably have to wait until, again, 4:30. So in this case, let's see when this breakout happened. First to mark this, happened at 4:45. Yeah, New York session started, traders started coming into the market, and that's when you're sure that a breakout trade will work, because we all know breakout trades can be very tricky. You can place a sell over here, and then the market reverses new. So in this case, you have a confluence of ideas from the market context we talked about to the turning points, to the bias. And now when you're looking for when to enter, in this case, if you're using momentum, because you expect a sharp movement in one direction, which was bearish, then you'd have to wait for some sort of trigger. And in this case, it was a time of day trigger. Okay. So that's that. The other type of probably trigger or type of entry you'd have to consider is a sentiment shift type of trade. So when it comes to sentiment, you're not really trying to capture momentum per se. You're trying to capture the general shift in the market, or you're trying to capture the time or the point where what was not being priced properly is now, or it now gets priced in. For example, in the oil markets, one of the ways to identify a sentiment shift is through fundamental analysis. We're always talking about some sort of news. We're always trying to gauge what is the supply and demand for oil at any specific time. So in this case, if, for example, we have bearish news coming into the market, so I'll use a larger time frame because fundamental plays usually play out in a larger time frame. So from the onset of the year, we've heard that there's COVID and economies aren't really opening up as people had planned. So there was probably going to be low demand for oil. So you'd expect a sentiment shift from this move over here. This move over here. So oil prices increasing means there's optimism in the market. It means that there is demand, or people anticipate some form of demand in the market, but that hasn't been the case of late. If you were to read a few articles, basically in the news, you'd find that there's still issues with supply, there's still issues with lockdowns. So you'd be anticipating a sentiment shift. But now the problem is, where exactly do you enter? Because you know, if demand is going to be weak, then you'd expect oil prices to weaken. And if you'd marked out all your levels, in this case, I can see we did a context analysis. So we marked out multiple levels over there, over here. And January began from there. Yeah. Okay. Like that. So as you can see in this case, a sentiment shift is you aligning yourself with the current mood of the market. If the market now changes and becomes bearish, then where exactly do you confirm this bearishness in the market? And that's where the reversal entry comes in, so the pin bar. And in this case, you've not just traded this pin bar because it's a pin bar. You've not just traded this pin bar because you're seeing that there was some resistance here, because at some point, markets can still break higher. So this is not just a pin bar for the sake of it being a pin bar. It's having a confluence with sentiment in the market. And that's where you play out your sentiment. Once you know that, or once you anticipate a sentiment shift, that's probably going to tell you the trend is going to shift. And in that case, you'd be looking for reversal plays. And reversal plays in this case are the very popular ones are engulfing candles at the end of key levels or pin bar candles. And this is a very good pin bar. And I'm using H4 specifically because a lot of these fundamental plays happen on a much larger scale, a much longer time frame. So using a H4 or H1 time frame will be more appropriate than using M15 or M5, because most of the times it's going to be noise in the market. So because you know demand is generally going down, then you'd have to look for an entry point somewhere in the market. So you wouldn't just want to enter this just because you know oil prices are going to be going lower, because number one, you would have to then again come back and manage your risk. So in this case, this sentiment shift, pin bar candle, what was the trigger? Lower demand for oil globally. So you expect oil prices to go down. Now you look for entry points. So in this case, if you missed this move, it brings us to our next type of entry, which is a breakout and retest. I'll just go to a much smaller time frame now, because now we know what is the driving force behind this downtrend, because the downtrend started all the way over here. And now that you know what is the driving force, then you can go and try and chase this trend for as long as the larger hypothesis still stands. And in this case, because we're in a downtrend, then we know we can look for lots of plays to continue shorting this trend. So if I was to just zoom in and look for basic characteristics of a downtrend, is we know it's a series of lower lows and lower highs. So this was a very straightforward play. So we had, for example, in this case, I'll just quickly do that and that. The market coming back to this level over here. Yeah. So we know that the market is supposed to be going lower. Chances are we've missed the first move up here, but we know our sentiment is still with us. So we can look for other entry points in the chart, like pin bars. For example, in this case, we saw rejection twice in the market. So this was a potential selling point or a continuation trade, because we know that within the larger context of the market, we are still supposed to be heading lower. Again, assuming we've missed that move, we'd keep on marking all our swing points as we move lower in this chart. So I'll just do that and then push this lower, and then that. And that. So here's where we had our breakout retest. So a breakout retest is simply where the market breaks a previous swing low, comes back to that swing low, and then forms a continuation move lower. Seems very straightforward, but remember where you're coming from all the way over here. We expected a reversal, waited for a pin bar to confirm our fundamentals, or in this case, if it will have been, for example, an engulfing candle at this point, probably should also have taken it. But assuming you missed that entry, then you can move to lower time frames because you're still in line with the bigger time frame, and you look for more entry. So in this case, we had a breakout, a retest, and what we had were two large bearish candles for the continuation. Stop losses will have probably been higher off this key level derived from the higher time frame. So now you're starting to see that when you're trying to place trades, you're not only relying on the information you're seeing from the chart, from like, for example, in this case, the 15-minute chart. This is not the only information you need to make this decision to place a trade. We've started from sentiment. We've gone all the way to higher time frame analysis, which is what we repeated yesterday. And now we're trying to do a continuation trade based off the sentiment, because in this case, we're expecting the sentiment to continue to carry the trend. You need to have very valid reasons when entering trades. Initially, we said momentum. What are momentum triggers? We said time of day or some sort of news. Okay, we're done with momentum. And we said sentiment shifts. Sentiment shifts are usually good when you're trying to do reversals, because a sentiment shift is when traders turn from being bullish, for example, to being bearish, or from being bearish to being bullish. You need a very good reason for traders to do that. In this case, we've talked about oil markets and how optimism for the global economy has faded on a much higher time frame. So in this case, we did H4 time frame. And now that, for example, we missed that trade, we are still banking on the current sentiment to help us continue this trade lower. And that's when we came up with a breakout retest entry. So we've moved from a breakout entry to breakout retest entry because we are not quite sure about the momentum. Because a breakout entry, ideally, for example, in this case, a minute. A breakout entry like Euro USD, for example, to get back to where we are today. This breakout entry, we are purely banking on momentum. And momentum usually doesn't last for that long. Sentiment, on the other hand, does. So if you're trying to enter a trade without banking on momentum, then you'll need some sort of confirmation. And that is where the breakout retest comes in. So we've seen momentum entries there, we've seen momentum entries there, but when you're not so sure about the momentum, then you look for more confirmations. And that's why if you see a breakout, you wait for a retest. Up to there, someone is saying we look at the gold chart. So if you have any charts you'd want us to look at, I think you can mention them in the comment section. And then we see what you can deduce from them. So let's look at the gold chart. I'll just clear this. Okay. We have gold. Okay. So go back to the daily. I think we covered this yesterday. For those who were with us yesterday, we did cover gold. And it was a very interesting chart because I remember for gold, what we did was we had a level over here. I think in yesterday's session, if you were to revise it, you'd see that we talked extensively about this chart. We had another one over there. If I was to zoom out, looking for key levels. So again, rules to look for key levels where a massive trend has ended or where price has turned more than twice. In that case, we have another section over here. Okay, so at H4, then you also said convert it to a line chart because it gives us a clear understanding of what happened or of the turning points. And then from the line chart, then you can convert back to a candlestick, build a narrative. We talked about all these things yesterday. Okay, so for gold, we said our bias was up because this was an uptrend. And we talked about if the price was going to head lower, then this was where we'll be looking for a reversal trade. If the price is going to go higher, then we'd wait for reasons confirming that price is not going to go below this level over there, like that. So if price is going to remain above 1850, 1849, then you have a good room to believe that we might possibly be going higher. If price shows signs of pulling back, then you'd have to find other key areas, but then there'll be minor areas around this section for you to start looking for setups to go higher. So in this case, I'll go to a lower time frame, like M15, because I know what I'm looking for in the higher time frame. Yeah, and then from here, I'll be looking for any setup that's going to suggest my initial bias is confirmed. So if I'm looking for a reversal trade in the 15-minute trend, a pin bar, a bullish engulfing around the key levels, then that's when I'm going to be taking my trade. Any other charts? Okay, so to wrap it up, we've talked about, today we were discussing trade entry ideas. We've touched on two main ones, momentum entries, with which would have to have a trigger of some sort to confirm that the momentum is going to be sustained. And one of the trigger is the time of the day. The other trigger is the news. And we talked about if at all you're not expecting momentum to be sustained, then you can enter with still within the context of the trend, but with more confirmation. And that's where the breakout retest came in. And we've looked at how the breakout retest is playing along with oil. Yeah, so like right now, the market is still dropping. We probably need to wait for price to come back to a good swing point or a good key level before we look for probably an engulfing candle or a fair value gap or something so that we can take it lower. And then we've talked about a reversal trend. So this is where you're looking for sentiment shifts. And for a major trend to reverse, then you need a very good reason for that trend to reverse. So in this case, we've talked about sentiment. When do you expect sentiment to shift? And one of the ways to be guided on sentiment is to look at the news and follow the news and see what traders are talking about and what's the main theme. So if there are no more charts that we can look at, I think we will call it a day. It's good to cover a few setups at a time. Hopefully we'll be bringing more setups as the year progresses. And having said that, hope everyone is having a good trading day. And tomorrow we'll be back talking about risk management and more setups. We'll be looking at more setups tomorrow, same time. So yeah, so enjoy your trading. See you tomorrow.